The global financial system is cracking, and here's why. Now, the global financial system seems to be barely hanging on by a thread. It's the Fed bailout, it's the debt ceiling, it's the Treasury's bankrupt, the UK pensions, the rise of the BRICS nations, and as crazy as all this sounds, there's a big logical answer. And yes, even solutions to all of this. And that's the topic of today's conversation I'm having with Preston Pysh. He's the host of the wildly successful podcast titled The Investors Podcast. And he takes his, tens of thousands of hours maybe of interviewing the most successful investors in history, distills it down for us in this conversation where we discuss the global financial system, what's cracking apart and where, why it's happening. Hint, it's the base. What comes next, how this can be fixed, what happens if we don't fix it, and so much more. It's an amazing conversation with Preston. I enjoyed it. I know you will too. Let's go ahead and jump right in. Let's just jump right in. I wanted to talk to you about this global bond market, but we're talking about money transmission, sending money overseas, and we're talking about how, do we want to talk about what asset?
No,
I mean, how
we're talking about lightning and how,
there's not enough liquidity to send massive amounts of money through global settlement.
Yeah. I just, when I look at lightning and I look at layer one, Bitcoin, and you just see that it's a true free and open market. The demand for layer two right now is not at a point where, if I wanted to send $5,000 worth of Bitcoin on layer two or 10,000, you're probably going to run into some limitations with that as far as channel management, unless you've opened like massive channels. And we're obviously talking about if like somebody else was managing the custody of those channels on your behalf. Like it's just not there from a capacity standpoint, but it's also because the demand hasn't fully arrived. We're at the infancy of that. So I just think it's something that's going to naturally solve itself with enough time and enough demand that starts popping up in the global south, and maybe resourcing to resourcing because of AI and micro payments. Like all of that stuff is, in my humble opinion, is coming.
And why do they even need that much liquidity? If you want to send $100 million, just send it on main chain.
Well, that's right. So like if it's a large amount, like if you're settling on a house, like, I'm sorry, you're just never going to do that on layer two. You're going to do that on layer one.
And why would you want to?
Why would you want to? You want the security. It's 10-minute blocks. Like you're 100x better than FedWire.
Even if you're doing it at peak time, like we just had with the Ordinal thing, what are you going to pay $100 to settle it?
Not even.
Or whatever.
It wouldn't even be that. It would be significantly lower than that. So, I think it's just for a lot of us, like we can see kind of where this is all going. And we're a little impatient because we're like, how can't we just be there right now? Like, why isn't this happening? And then you get the whole all the things happening on the fringes of all these other tokens that are saying, well, we do have the liquidity, but you don't have the security and you don't have the decentralization, which therefore means you don't have the 21 million hard cap, because you don't have those other two things, and so
especially Ethereum.
Because
they just decided to become ultrasound money, but the fact that they changed it disproved that. So
exactly.
At least XRP hasn't changed 100 million tokens. I mean, at least they haven't changed it yet. Whereas Ethereum, they seem to change it all the time. So I agree. I mean, it doesn't have liquidity, but again, why does it need to? If you want to transfer a large amount of money, you would think you would want that to be immutable. Now, where I think the debate on layer two gets really interesting when you're thinking of it like 5 years, 10 years from now, is like, what's going to be really dominant between like people that are just outsourcing the custody and the channel management, or are people actually going to want to do some of that on their own? And I think that's up for debate. I know when I'm using Nostr, or sending sats to a friend or whatever, and it's a small like micro size, like I'm sending somebody 5 cents worth of Bitcoin. Like what I find myself doing, and I guess I'm a little ashamed to say this as a Bitcoiner, is like I open up Wallet of Satoshi because it just works and it's simple, and like I'm not managing the keys, somebody else is managing the keys, and like if I've done it with $100 worth of Bitcoin and it's gone, I just load another $100 of Bitcoin in there, because the speed at which all of their channels that they've opened through their node network that they run is just so turnkey.
And if I mess up or it gets compromised, like the email that's associated with it gets compromised, like, it's $100, whatever.
Yeah.
Right. I'm curious at like 5 years from now, is that how most people in the world are wanting to use it? And if so, is that an issue? Is that a attack vector? Is that a centralizing,
I don't think so. I was just outside with Gary Cardone, Grant Cardone's brother.
Yeah.
And I mean, he's very, very smart, very blown away, but he's not at the level that most people are. So for example, I was talking about wallets, meaning like a Satoshi wallet or whatever, and like he wasn't up to speed. So he's like, I don't really understand this. And I was like, okay, well, he's like, I don't know if I trust a wallet. And I was like, I have this, like, how much cash do you carry around?
Yeah.
A couple $100? He's like, well, probably more than that. I'm like, but the point is, you don't carry more cash here than you'd want to lose.
Exactly.
He's like, yeah, so maybe $1,000. I'm like, yeah, so if you lose $1,000, no big deal, right? So that's what you would carry here.
Yeah.
To your point, if I use a hosted solution and I lose it, like whatever, I keep the rest in cold storage.
Yeah.
Just like you would with your bank.
Yeah.
Right? And so he didn't get that. And then I showed him, like, I opened up Venmo, and I was like, if I want to pay you on Venmo, I would, and I did. I opened up Venmo. I said I hit pay, and it opens up to scan. So now you got to show me your QR code. And then
your Venmo QR code.
Right. And then I opened up Blue Wallet. That's what I just used to get Safety's new book downstairs. And I opened up Blue Wallet, and I said, it shows how many sats I have. I said send, and it opens up a thing to scan a QR code. I'm like, it's the exact same thing.
Yeah.
And he got it. He didn't know it was that easy.
Yeah.
But to the point that you're making, you use that wallet to carry around a little bit of money, whether you want to use it on a hosted solution or not. And I think the key piece here is that you can choose the trade-off that you want.
Yeah.
That's the key piece.
No doubt about it. And we want it to be if there's one thing we all learned in Bitcoin is like, I want a free and open market. I don't want to dictate anything. I just want to make sure that if a person wants to have the option to run their own node and to manage their channels, that somehow, some way, that does not ever become, from an engineering standpoint, removed through some type of disincentive that I'm not thinking about today.
Right.
And so, although I don't think that's going to be the case in 5 years from now, that like a wallet of Satoshi where they're custodying the private keys on layer 2 becomes this dominant thing and that the other gets pushed away. Right. I don't think that's going to be the case. But I don't know that I've spent enough mental rigor working through the game theory, working through the engineering, working through the vulnerabilities and like what might pop out of it. So like, I'll give you another example of like a vulnerability that I'm thinking a lot about is like on the inscription side.
Yeah.
Huge topic right now, right? And so David Bailey, love him, wicked smart, right? He's looking at everything that's happening on the inscription side and he's saying, hey, everybody that was doing all these BS activities, and he's like, and they're BS activities on Ethereum and like all these other chains, he's like, they're coming to Bitcoin.
Right.
He's like, but it's not a bad thing. And the reason it's not a bad thing is because if they're not actually creating economic value, like it'll only persist for so long and then they're going to be bankrupt because they weren't, like actually having real customers. It was all just fake.
Yeah.
And he's like, but it's utility. It's people coming here and using the network. You might not agree with how they're using the network. So like that's his argument, right? And I agree with all of that. But I also look at it from like, okay, so 5 years from now, are these people going to create some massive campaign to increase the block size because they don't want the miners, similar to like what you saw on Ethereum, eating up all this value? And so does this introduce kind of a initiative that is going to bring back the whole argument for large blocks? I have no idea. But as somebody who's just trying to assess risk, into the future, where does that go?
Well, a couple things I'd say about that. So first of all, unintended consequences. In complex systems, you have unintended consequences.
Exactly.
So when they made the upgrade, they didn't think that this would happen. So it's the unintended consequence of that previous action, which is why myself, and I'm sure I know Michael Saylor's been vocal about like, let's just leave it as it is. Like let's bring the changes on higher levels so we don't do that because of unintended consequences. The other thing I'd say about that is, of course, anyone can change the block size anytime they want. Just fork it.
Go ahead and fork it
let the market choose.
But
I was doing the news desk this morning and with Pete Rizzo, and we were kind of talking about this, and he was saying that he also thinks it's a good thing because it's actually taken away all the other chains' main use case. Because their whole marketing pitch is Bitcoin is old technology; it can't do this stuff. Well, it just did.
That's David's point.
Right. So they're probably same time.
And so like I don't disagree with David. as the engineer, like coming out, I was like, okay, so what is it that we're not thinking about? What's the unintended consequence of this? And you know, in my opinion today, and I get most of this because Pierre Rochard, I value his intellectual engineering opinion so much, and like he looked at me, he's like, what's the emergency? Nothing's breaking. This is great for miners as of right now. It's great for expanding the channel capacity on layer 2 because now you saw all these exchanges, Binance, Coinbase, like all these exchanges that were like, yeah, cool story, but like we're not doing layer 2. Now all of a sudden,
the need
literally within a week,
Yeah.
they're like all of a sudden doing layer 2 stuff. And so, you know,
we have to have that stress in order to grow.
That's right.
So you got to stress the system, and then to your point, maybe we even have new layer 2s that pop up that have new things or whatever. And the other thing I would say, you did an interview with Jason Lowry, which I had retweeted at one point. I thought it was an amazing interview. And at the end of the interview, I think you'd asked him if you could say something to lawmakers. What would you say? And he said, I would tell them that just because it says Bitcoin, just because it has coin in the name doesn't mean it should be regulated by financial industry. No more than Amazon's cloud should be regulated by meteorologists.
Yeah.
And while I don't know if I agree with his entire thesis, I love the different angles that he comes from. And part of it is I think about, and you have Bitcoin the network and you have Bitcoin the asset, BTC. And so if you think about the network itself, so you have a global, permissionless, censorship-resistant, immutable, decentralized network. And so then like, what could you do with that network, right? And so this Ordinals is showing us what you can do with the network. So certainly, all new technologies, if you go to the invention of electricity, the first killer application was a light bulb. The first killer application was money, a digital asset. But what else could this network do? And so the Ordinals are showing us, so like, for decades people have risked their lives smuggling physical copies of Bibles into authoritarian regimes. And now the King James Bible is on the Bitcoin blockchain. Right? 3D gun schematics or whatever it is. And so like, that just starts to make it seem way bigger. And so while putting JPEGs on there seems stupid, you know, for a lot of reasons.
No, your point is super profound. It is, and so that's why, you know, like you, I'm just like, hey, let's just wait. Like, just calm down. Right? There's no emergency. The building's not on fire. In fact, like, we're seeing benefits actually from the fees popping out for like literally incentivizing growth in these other areas that we need to have infrastructure and growth happening. And I think it's a little bit, you have a lot of hubris to think you understand how any of that block space is going to be used 10 years from now or 20 years from now. Like,
or to say who can use the block space.
Amen.
I mean, so no, you can't use electricity mine, but you can use now we're into that? And
now, well, so let me push back. So with all of that said, there's an analogy I like to use here, okay? So chess, right? So when you look at the pawn, you got values on the pieces. The pawn's worth 1, the bishop, the knight, it's worth 3, the rook's worth 5, the queen's worth 9. The king's value is unlimited, right? Because if you lose the king, the game is over, you lost, right? So when I apply this to Bitcoin, I'm saying, what's the king, right? What's the pawn? And why would the king be unlimited value, right? So
I love your analogies.
So for me personally, you know, I served in the military. I lived in a combat zone. I was basically the proof of work miner of the legacy system. Serving, right? And I'm looking at what incentives that pop out of that legacy system, which is you're not actually incentivizing exchange in a way that that's not immutable, that there's bad actors that can step in, whether it's this country or that country. I'm not going in that direction, but what I'm saying is we have an opportunity to literally have a phase transition for humanity for the very first time in human history.
I agree.
That incentivizes global cooperation. It's as profound as the ATP as an acting currency between all the organs in your body. That is what Bitcoin is truly representing. And for me, that's the king. You can't sacrifice that, ever, no matter what. Like, it's that profound of an idea. For an inscription because now I don't have to go to the AAA office and like get the rubber stamp from Sally saying, yes, you went to this office and you were here at 12:19, and I don't even know what's on the document, but you were here at 12:19, here's the stamp, right?
Yeah.
Like, to me, that's the pawn, or like that's a bishop, right? And like, we cannot, as a community, we cannot give up the king on the board, which
so
is
in this analogy,
money.
what's giving up the king? Money. So
It's
you're saying
money.
if these inscriptions were to crowd out money, if they
Yes.
became worth more than...
That's right. We lost the game.
So
at
let
that point, yeah.
me flip this a little bit. Not
Yeah.
flip it. Let's dig into that a minute. So, as things evolve over time, we expand our definitions of things. So, for example, in the '80s, still, and up to the '80s and into the '90s, even, what did we consider information? So think about just what information was. Well, I read the morning newspaper from 3 people.
Yeah.
I have the 3 channels on nightly news, and I guess there are some books in the library, right?
Yeah.
That's information. Today, you have a kid in Indonesia post a picture on Instagram, and I know what the waves are like, I know what the weather's like, I see
Yeah.
what types of trees are there, and so like information has expanded.
Yeah.
When Karl Marx wrote the Communist Manifesto, he was mad. He didn't want to be an attorney. He wanted to be a philosopher, but nobody valued philosophy at the time.
Yeah.
And so what he wrote is that the poor have no capital; all they have is their labor. Well, today you can get capital by writing philosophy, right? And so like definitions change. So back to money. We don't want to lose money. It's the most important thing. But what is money? Money communicates value.
That's right. It's the honest ledger. It's the
It
so like Claude Shannon, right? It's all about information theory of exchanging information. So if I come and I do some work for you and you want to pay me, like nobody can corrupt that communication of like what happened.
But
in
what
the
if I want
ledger
to
of what
provide my
happened.
labor to you?
Yeah.
Or I want to trade you this iPhone,
Yeah.
or I want to give you this book, or
Yeah.
I want to give you a 3D gun schematic.
Yeah.
That could be money as a medium of exchange. I could
Yeah.
exchange this item for that thing, and so if I'm putting 3D gun schematics on the blockchain, is that money? I mean, it communicates value. And I don't know. This is like, we'll see what happens, but I understand what you're saying.
Well, and I'm not even using that example. I'm not saying that that's what it is doing. I'm just saying we got to make sure on a long time scale, right? Like I'll give you an example. So like, let's say it's 5 years into the future, and we have people that are like the fiat system, right? They can print as much of that stuff as they want, which can act as an attack vector if the right
And
person.
maybe it already was.
And maybe it already was.
Right.
But now they're literally blowing out the mempool, and like the fees are blowing out, and like you're in this, I mean, it's a perpetual money machine that like has no limits, right?
Right.
Like maybe there needs to be something that needs to be discussed, but like I don't think people should even remotely entertain that until like years from now, that it's demonstrating like, hey, this is continually getting worse, and it doesn't seem like there's, and I don't think this is what's going to happen.
Right.
But
if it did, then...
But because I just have an appreciation for my total lack of actually understanding what something could look like that far out in the future, I'm just saying that we have to always remember that first and foremost, no matter what, it has to serve as money, right? And you can get into the intellectual debate on what money is. And we'll leave that for Robert.
Yeah, we'll leave that for Robert. Yeah, I hear what you're saying, and so there's already things that prevent spam, mempool, and things like that, and so they can. But to your point, I would agree. At first, and I was a little bit guilty, and we kind of have to think about these things. But at first, I was like, oh man, why did they make these changes? And this is unintended consequence, and we should think about these things. And then you start getting into this kind of like knee-jerk reaction, and that's the problem. Yeah, because you realize I could change it to stop this, but then what else am I doing? And so we just don't know.
And I think Michael, he talks a lot about just like the first layer, it's solidified, like just like let's go to layer 2.
That's kind of what I'm saying.
And I think he's very right. If I was gonna put my chips down on like who's right, like I think he's right. Yeah. And I think that it's just the free and open market, if there's one thing Bitcoin's taught me is like, just give it some time and the free and open market is going to figure out like what is value, and if it's in value, or if what the activity isn't adding value to some end user, like it's just gonna naturally sort that out. It might not be at the timeline that you like, but it's gonna sort it out and it's gonna figure out how to take care of it, Yeah.
Hadn't really planned on going down that rabbit hole, but it was a fun conversation. I told you before I was really enjoying the kind of I don't know, the thesis that you threw out in Wyoming when you talked about like the bond market and how it's shifting. And then I heard you talk about it again somewhere else. I forget. Or in so many places.
I think most people, they're so detached from bonds. And so like when they look at...
And just to tee this up, we have this global financial system that's on the verge of teetering on the brink of collapsing around the world, not just in the United States.
Yeah.
Obviously, the bond market in the United States, which is the deepest bond market in the world, is teetering on the brink. Banks are failing, but also globally, we're in the same situation. And so bonds have been money or the main store of value.
Yes.
And so I think that's kind of where you would build this. So we're witnessing, this the first kind of sovereign debt crisis in over 100 years. Mm-hmm. And so that's kind of where we pick up with this, right?
Yeah. So Michael was doing an interview, I don't remember who it was with, but he's talking about Bitcoin being this bedrock that you can build upon, right? And just kind of like taking that example, but applying it to the legacy system for the last 40 years.
This new harder asset, he calls it like a harder asset compared to the existing soft asset.
You can build on this bedrock because it doesn't deflect, like the ground isn't deflecting, right? And so I guess I'm describing it to people who I don't think are familiar with the legacy system, is the bedrock that we used to build on was really good. This treasury market for 40 years, for people that were paid in US treasuries, the value just kept going up. Like, so that's a place that you can actually store. Like if I earn $100 and I plug that into the treasury market, if yields keep going down, the value, especially if you were doing it with long duration bonds, like that value is like aggressively getting better.
Right.
So for everybody in the world for the last 40 years before COVID hit, they were very happy using the treasury market as their bedrock. And the reason why was because it wasn't just storing their value, it was making the value appreciate for them.
And what about the 40 years previous?
The 40 years previous, interest rates were going up and that was not the dynamic, right? But the way that was offset is through the adjustment through the monetary baseline.
Right.
The ratio is how that was offset, and that's why you, in my opinion, and people will argue this, but that's why you got the inflation you got into the 81 when it peaked out. Right. So so I think that's important for Bitcoiners to start with, is because the legacy system's evil and all these things, and it does create all these warped incentives, especially when it's not backed and people are they're not even faking that it's backed anymore, because supposedly it was backed from Bretton Woods to 71 and everything there in between, but it was backed, but they were adjusting the money multiplier, so it really wasn't. It was constantly failing. It was just a really slow failure, right? So, but my point being is, when we look back prior to COVID, when I think everything's kind of deflecting now in that legacy system that used to demonstrate bedrock that actually got stronger. And so when you're building on something that's getting stronger and more solidified, like everybody just wants to build on top of that.
Right.
But now I would argue that what did we get up to, like 8% inflation on CPI?
9.1.
9.1, yeah, it was even higher than that. 9.1 on the CPI gauge on this last mini cycle, whatever you want to call it. Everyone's like, whoa, what was that? Like they're in these legacy buildings that are all built on top of this bedrock, and it deflected, and like the pictures are moving. They're like, what the hell was that?
Yeah.
And like that was just the first shock, because what's coming next, and we can all see it with the debt ceiling coming, and since October, November, they've been draining the Treasury general account, basically weakening the dollar, and it's been just the total charade for since, we'll call it November, October, and now you got like $50 billion left in the Treasury general account, and they're about to hit the ceiling, and on the Hill they can't agree on raising the ceiling. Like it's about to it'll be spicy by the time this airs, most likely.
Yeah.
And so how are they going to offset that? They're going to have to offset that with so much printing to the tune of trillions, if not tens of trillions of dollars. And like we hit 9.1 here in the States. There's still double digits over in Europe and some places in Europe.
And going
you go outside of there, and then now you're talking 50% to 100% annual inflation. Like look at the pain you're seeing in this country with 9.1, and now we're at like 5 something, right? Like the pain you're seeing. Could you imagine going into a country like Argentina right? What is it? 30 million people live in that. It's 10% of the U.S. population, and they're dealing with 100% annual inflation, and they've already got a new all-time high when they compare the Bitcoin price to their local currencies.
Right.
Like, you think those people aren't seeing something right now, right? And so, like, the deflection for us isn't nearly as profound as the deflection for most other places around the world.
Right.
And they're seeing it, and they're saying, all right, so where's the new bedrock? Where are we going to build? Because where everything was constructed for the last 40 years is coming unglued. And the shocks are getting more profound.
Right.
And they ain't seen nothing yet. Like, the shocks in the coming 3 years,
Yeah.
they're going to really see some deflection. Like, it was,
Yeah.
yeah.
And on top of that, now we're entering into this sort of a decentralized world, as I like to call it, where now the world is sort of breaking apart, this dollar homogeny. And not only is it deflecting to where, like, I don't know if I would put money there, but now I have to be worried about the U.S. dollar being weaponized against me.
Yeah.
Sanctions and things
They
like
can't
that.
afford, like, in most countries, they can't afford to touch it anymore.
Right.
Because when their debts are denominated in dollars, they can't afford to touch it because they're getting annihilated trying to pay that back.
Right.
As you know, and so you saw Stan, and like he reversed his opinion, Stan Druckenmiller, on like the dollar. I saw something that he was very bearish on the dollar, and then he changed his mind. But he might change his mind for 2 weeks. But I think you're at this really critical point, and I think the only reason you saw the dollar sell off there for the last 5-6 months is because they were doing funny business with the general account, and now they have to keep providing that to provide stability in this situation where you have more bank failures this year in 2023 than you had in 2008, which I think the common person on the street would be like, what are you talking about?
Yeah.
Right?
Yeah.
I think that's just getting warmed up.
Yeah.
I think going into the third quarter, like second to third quarter this year, like, dude, it's going to get crazy. I think it's going to get crazy.
That's your base case.
That's my base case, yeah.
I think you can argue either way. I'm tending, I see 3 ways out of it. So I think there's this muddle along, like Argentina would have, right? There's this kind of muddle along. We kind of go through stagflation, trade sideways. I think certainly there's plenty of reasons why we could have a massive crash.
Yeah.
Well,
when you say crash, like, you really have to define
what
like,
a crash is.
In what, yeah. So
well,
like,
I think one in the economy. So,
Yeah.
right, I mean, we can see consumer spending or
Yeah.
consumer debt going through the roof,
Yes.
consumer savings
Yes.
dropping like flies.
Yes.
However, if you look at the economic data, the last quarterly reports were just posted, and revenue and profits are still doing pretty dang good.
Yeah.
And unlike 2008, in 2008 we saw a certain sector. Well, in 2000 and 2008 we saw a certain sector get smashed. Right.
Yeah.
So it was the tech sector in 2000. It was the real estate sector in 2008, and that put a massive hole in the economy. And of course, the trickle down from that. We don't have a big hole in the economy right now.
Well, so where's all the issues cropping up? The issues are cropping up with anybody who has a substantial amount of exposure to treasuries,
Yeah.
right?
Which is not the retail,
Which is the banks.
which is the banks.
Yeah.
So we're witnessing the fiat currency crisis, which is now causing a banking crisis, which is in a sovereign crisis, but not in the retail consumer. And that's why going back to this economy piece.
But it'll get there extremely fast if they don't act in redenominate all the impairment in this treasury market with more cash infusions or
Right.
more
Well,
debt.
we're witnessing,
right? So,
banks tightening
Yeah.
their lending, for example. So the SLOOS reports show how fast they're tightening credit, which of course will then trickle to the economy, because if businesses can't get credit, that's
Yeah.
going to be a big problem. We know of the hundreds of billions of dollars of corporate debt, that has to be rolled over
Yeah.
at new rates, and so that's going to be jacking through the roof. Obviously, there's the massive bomb in the commercial real estate mortgage, backed security market. But the Fed could just take those on their books, and they could just roll over the bond market, which they've done.
They can, but they're at the point now, Mark, where everything that they've got to do is further manipulation of a free and open market.
Of course,
right?
yeah.
And as they continue to do that, in this next amount of units that are added into the system, like the last COVID, right? Those units, everybody thinks it was because of the virus, that's the sole reason why we got this spike, and you're not going to see something like that again. And I dramatically disagree with that. I think that was the first step, and now the next cash infusion in order to keep civil unrest at bay, they have to keep the units flowing down. This is the whole reason CBDCs are cropping up,
Yeah.
because they have to be able to control it down at this level where it's like, oh, the price of bread's just getting too far out of hand, so now we got coupons so that you can only buy half as much as what you were doing, and like all these types of these weird, like, it's all about order and control as we're going further and further down the path.
100%.
And the lie of like what inflation actually is only going to continue to crop up.
Yeah. And I don't disagree, and I don't think almost anybody would disagree.
No, I don't think so either.
There's two certainties in life, death and taxes, and now there's a third, money printing. I mean, it has to be. It's the only way.
And their intent is order.
Yeah.
Like, and I think most people in society are saying, well, I do want order. I don't want chaos. I don't want calamity.
Yeah.
Right. And so trust me, the last thing I want to do is go easy on central bankers or like some of these people that are making policy decisions. But at the same time, what they seek is order. They don't want chaos. They don't want social unrest. And truly, the only way to do that in a fractional reserve system with an unbacked money fiat supply that has been tampered with for 40 years straight to prevent unrest is more of the same with the policies until they literally make something pop.
So let's take it to another level. This is what we were talking about before we were recording that you wanted to pause, and I think it's a perfect time to bring this back. So they don't want unrest.
Yeah, they want order.
Who's they? And this is the key question. And the reason why I say this is because, back to the conversation we were having before recording, if you look at the global board, if you look at the world, the Game of Thrones, as a strategic board game, and a lot of this I got from Tom Luongo. As I said, we trade a lot of messages. He's been on my channel. We just had a 2-hour rip. I think the first hour published the other day. So if you look at the world as a Game of Thrones global strategic game, you have multiple players, and so there's certainly the BRICS nations, the global South, that are kind of trying to do their own thing, and then you have the globalists, which is the Euro Davos ECB group.
Yeah.
He would, and I would agree, and we can discuss why, but factions within the U.S. are probably aligned with that. So you have Obama, Biden, Yellen, for sure, on board with that. But then you have U.S. nationalists, so probably the Federal Reserve, Jamie Dimon, and some other nationalists that have another faction. And the reason why that's important to understand is, as a Bitcoiner, one of the biggest things that we would always hear is they will never allow something like Bitcoin to happen because they will never give up control over money. Well, who won't give up control over money? Yeah. So the Fed doesn't want to give up control to the ECB or to the BOJ or the PBO, like which one?
Well, so I would break down the world, and I love the different buckets that you put out there. I would just trying to go first principles, right? So the people who control the equity of the world, right? The behemoths of equity, like they're the ones that can pretty much get what they want.
Right. And so who are they?
Well, I mean, it's the Apples. It's like these really large equity,
multinationals.
Right? And then go right down who the shareholders are. And when you look at and this is an important piece too, when you look who the shareholders are, so many of the shareholders are BlackRock or these large institutions that have them in ETF buckets. And so even though like an individual might have that in their retirement account, are they actually able to control or influence? And the answer obviously is no. But BlackRock sure can. They might have a seat on the board of whatever large piece of equity it is. And so when you go up and you think about the structure of who owns all the buying power, and you see how much power is put into some of these banks, you can see why they are aggressively trying to control certain narratives.
So then I'll ask you a question.
Yeah.
Out of those players I framed up, who is BlackRock aligned with?
I think BlackRock's aligned with
World
the
Economic
WEF
Forum,
for sure.
Ukraine, they're doing all the funding to rebuild Ukraine, which is part of the WEF, which
all
is
makes
the Euro
sense.
Davos group.
Doesn't mean it's right, but from like an incentive standpoint, you can see why that all makes sense.
So,
right?
so to your point, yes, there's part of that Euro Davos globalist group is BlackRock.
Yeah,
they're part of that.
Yeah.
So
the line gets blurred as to like who's actually pulling the strings. And
so that's why we're just like looking at aligned interests. Yeah. Because what happens in a Game of Thrones is like, hey, me and you, let's fight these guys for now, and when they're gone, now you and I are going to figure it out. Yeah. Like,
but there's one other thing I want to cover on this, on like a first principle standpoint, is where this is going, is the people that control the equity of natural resources and truly desirable necessities in society.
Goods and services.
There's a transition that's happening. like in real time, that I would argue that people that just controlled the equity, like the largest cap type equity, before held all the power. But where it's transitioning is people that control large amounts of equity for very desirable products and services, equity of those types of things. So your oil companies, like all that, right? They're the ones that are really going to be able to call the shots here during the transition to this new monetary system,
right,
in the coming 10 years.
Which kind of goes into a little bit of like Zoltan Pozar's thesis of this
Yes.
kind of like, you know,
Yes.
third revolution, right? Third Bretton Woods, where we're going into commodities, and we're seeing that. So like General Motors, for example, spent $650 million on a lithium mine.
Yeah.
They'd rather have the lithium in the ground than the dollars. Right?
Yeah.
And so we're starting to see it, but we're also seeing that on a global stage. So I think that's maybe
Yeah.
kind of what you're talking about.
Yeah.
But so if we look at it like that, then we would go, well, some of these globalists, including the WEF, we could go to their website at this very second. It's still
Yeah.
up. They haven't taken it down. It says by 2030, the U.S. will no longer be the dominant superpower. Okay, so there's in this George Soros has been openly stating for 2 decades that they want to bring down the United States. So you have some of these things that are public. You know, it's not conspiratorial. It's on their website. We can go find it. And when we play this interview, let's pull those up on the screen.
What's so amazing is they have no idea who's going to be in power in the United States. That let's just say we have a presidential candidate that comes in and they're like pro Bitcoin and they're putting it on the Treasury in a secret kind of way and they're printing a bunch of dollars and they're stacking sats and whatever.
It's because
right?
what Mayor
Like,
Rothschild said 200 years ago.
Yeah.
Give me control over the money and I care not who makes the nation's
Bingo.
laws.
So for them to even think they have a clue as to who's going to figure this out, because it's an education thing.
Yeah.
Right? It's an education thing. And that's why I guess I'm so passionate about even being in this space. Is like, if you can just get the knowledge and the understanding and the curiosity in the head of the right person who has the influence to affect change in any country.
Right.
Doesn't matter what the country is. Boy, oh boy, watch out.
Yeah.
Because that country, and I would argue there's a real small one in the world right now that has that happening,
Yeah.
right? And I think they're going to have a tremendous amount of influence years from now,
Yeah.
because of that leadership.
And so to your point on that, so then you have, if we don't need to dig into that, but if you have these couple people, the ECB, the Fed, the BOJ, whatever you want, PBOC, the people that have control and they can fight it out. But then you have a whole group of people who have no control.
Yeah.
And so for them, they have nothing to lose.
Yeah.
They're stuck dealing with dollars or whatever currency that's dying, and then they maybe have to go to jump to dollars. So they have nothing to lose. They can jump to that.
Yeah.
It's easy to see why the ECB or the Fed doesn't want to go to that, because they'd rather keep the system going that they have.
No doubt.
And so that's where the game theory comes into play.
Well, and I would say in the global South, one of the things I'm most excited about, like one of the challenges you have is to progress, you have to start first principles. You need energy. Like you need energy in each one of these, if you were thinking of it like cells, right? The cells in your body. Every single cell in your body has mitochondria, which is an energy power plant. Has its own DNA. Its DNA is different than your human DNA, right? It's its own organism, right? When I think about Bitcoin, it's basically a mitochondria power plant that goes into these cellular regions, and now it immediately has somebody that's willing to buy the energy. So in that cellular region, if it's energy rich, right, and somebody can go in there that actually sees the vision and can set up a power plant with mining there to soak up all that energy, that cheap, like ever flowing energy, right? Now all of a sudden you've created this mitochondria in that cell that all these sorts of complex activities can start manifesting themselves around that energy source. Yeah. And so when I think about the global South, one of the things I'm most excited about is it's not that they're just going to get like sound money and access to all the unbanked. It's that they're going to have an incentive for people to step into areas that are rich in energy. And they're going to be able to set up these mining power plant combos. Yeah. And then it's going to turn into this flourishing of activity that surrounds it, that's competing for the energy.
Like Saudi Arabia did, an oasis in the middle of the desert.
That's right.
Yeah.
Yeah.
And they had oil, which oil could be packaged up and transported out.
Yeah.
You can't do this with a lot of this energy in these other countries, but they don't have to anymore.
Yeah.
So now they can just put a container there, Starlink it up, and tap right into it.
Yeah.
So then you're bullish on that. I'm bullish on that.
Yeah.
That kind of changes the world. And so then I guess kind of drawing back to the original conversation. So while let's call it the G7 or maybe even the G20, while they want to duke it out over who's going to win the ultimate Game of Thrones over here, you have sort of these players that are already out of the game that are going to go ahead and just keep building, tapping into this.
Yeah.
And so while they want to fight it out, we'll have this kind of rising up.
Exactly. Now, that doesn't mean that in developed nation states that you're not going to have growth and because it all comes down to whether you have key influential leaders that understand this.
Right.
And if they do, they're going to crush it.
Right.
But I would say they're going to be blinded by their legacy bias, and it's going to be extremely difficult to overcome. And when you look at how most of this type, the developed nations, how that world revolves, it revolves around very wealthy legacy people funding their incentives, and it's going to be very
because it
difficult to
works
see
off
through
of
that.
incentives, specifically on the greed incentive.
Yes.
And so as corrupt as some of these people might be, if it can feed that greed,
Yeah.
I mean, there's a good good chance they'll do that. And then there's a lot of other ways. I met with a guy here. I'm kind of under NDA, so I don't want to kind of expose what he's doing. He's over in Europe where they have energy problems, of course. And he's figured out a way, we'll just say, to take devices in your house that use a lot of electricity and embed mining into that.
Yeah.
All right, I don't know if you talked to him while he's here.
Yeah.
And basically, his plan is selling it is to never even mention Bitcoin or mention Bitcoin mining. And hey, here's this electrical device. It costs as much as the next electrical device, but I'm going to rebate you 20% of whatever your bill is. And he doesn't tell him what it is.
Yeah.
And like, that's a genius way to think about it. Gets into that greed. I don't need. And he said at some point I might say, hey, okay, there's Bitcoin in here and here's a wallet for you. But he's like, right now I didn't want to talk about that.
Yeah. And he doesn't need to.
Yeah.
If people are getting a discount by 20%, yeah.
Right. And so back to these other countries, if it's like, hey, there's a way that you can set up this power plant, it can make you money, and you don't have to say Bitcoin at first.
Yeah.
It's
probably one of the reasons I'm so bullish on it is because every little nook and cranny you look, there's something that's like this reinforcing engine to Bitcoin, like the example you just shared, right?
Yeah.
Where like people that are creative enough to think through, like, I don't even need to tell somebody that there's Bitcoin happening over there. They're just getting 20% off their energy bill.
That's it.
And I'm paying them the 20%, it's all in terms that they understand, which is fiat money, right? The thing is over there doing that work, and he's making out, and they're making out, and there's this win-win like incentive that just keeps popping up everywhere you look in every single facet of this thing.
Yeah.
And it's like, it's a Trojan Hydra.
Yeah.
It's a Trojan, like you cut off one head, two grow back.
Yeah.
And the thing is just, and it's been like that since I've been in the space, and it just doesn't, it seems to be relentless.
Yeah.
It seems to be relentless. And I know I'm biased and I'm a Bitcoiner, but like.
Well, we have 14 years of history to show that.
Yeah.
And that's a long time.
Yeah.
And I think, and again, I mean, just to reiterate, no matter how much they try to clamp down on it in one location, there's other people that are going to want it.
Yeah.
So.
No doubt. Yeah. And that's the game theory that people that show up with not a lot of experience or time, like, it's like, oh, the government's going to ban that. And that's like the end of their thesis, and they're not going to dig in because the thing has 70% volatility, and only these crazy crypto people are running around, and they look like
I just think that's a very U.S.-centric viewpoint.
Yeah.
Because you forget that there's the rest of the world
It's a privileged
out there.
viewpoint.
Yeah, exactly.
Yeah. But people willing to do the work and dig in real deep, they're going to see it, and it's going to be very difficult to unsee it.
Yeah.
Yeah.
Well, I think we can wrap it up there. That's a good,
Love it.
Good little rip.
Love it.
Appreciate it. Thanks for taking the time.
Thank you so much for having me, Mark. I love talking with you, man.
Yeah.
I love talking with you.
All right, that's a wrap. Hopefully you enjoyed this conversation with Preston Pysh as much as I did. Make sure to give him a follow. We'll link to his stuff down below. Of course, his podcast, The Investors Podcast, talking about some of the brightest and best investors in the world. Make sure to give that a follow. And of course, leave me a comment. Let me know what you thought about this. Was there something that you learned, something that you thought about, something you want to share? A thumbs up if you liked the video. If you don't, thumbs down, that's okay. But at least tell me why in the comments. Subscribe if you're not already subscribed. And that's what I got. To your success. I'm out.